The AI trade faces a big test this week. Nvidia, the world's first $5 trillion company, reports results on Wednesday. That stock has gained more than 1,000% since ChatGPT was launched in November 2022, and every earnings report is a key test for the AI trade. Last week, worries tech stocks are overvalued and that the Federal Reserve might not cut rates in December after all sparked a sell-off. Chris Turner is head of markets at ING Research. Chris, how crucial are Nvidia's numbers for the whole market?
Yeah, I think we've all understood that the rally in the S&P this year is incredibly narrow, so built on a few big kind of tech stocks. So we really need to see whether they deliver in terms of their kind of earnings. Obviously, it's had an amazing run. There's a lot of macro consequences as well, in terms of it's generating really some strong wealth effects for the US consumer. So yeah, I think as the US government sort of returns this week and focus really returns to the US, I think it's probably going to be a big driver of markets this week.
Should the market be braced then for volatility?
Yeah, I think it probably should be. It's been relatively kind of quiet so far recently, but I think going forward, yeah, that's one of the biggest risks, I think, to the US story. Whether this whole concept of like incredible investment that is ongoing and so far has been producing the results. We've seen that in kind of revenue figures for the big data center providers, whether that's kind of enduring. So yeah, I think as we run into the final 6 weeks of the year, I think it's going to be a very hot topic.
There's a lot of the money sloshing into these crowded trades about bets on the cost of borrowing getting cheaper. What if the Fed does not cut rates in December?
Yeah, I think that would be a surprise, although I think the Fed would be quite happy with what's happened with the price action over the last probably 4 weeks or so. Remember in late October when they cut rates 25 basis points and the market was fully pricing in another move in December, Jay Powell, the Fed chair, effectively said it's not a foregone conclusion. There's a lot of strongly differing opinions internally at the Fed. So effectively saying, don't bet on another rate cut in December. So I think the Fed would be more comfortable now, and the market only prices about a 50% probability. I think if the Fed didn't cut, yes, the market could come a little bit lower, but I think the fact that they wouldn't be cutting because the economy is doing quite well, growth is holding up, inflation's not quite as bad as expected. I don't necessarily think that alone would need to trigger a major market correction by itself.
We get some of the US economic data that was delayed by the shutdown this week. September's jobs report is expected to come out, although the White House says October's may never. Will the data that we do get tell Fed policymakers anything useful?
Yeah, so as you say, it'll be the September data, so we get kind of the headline numbers, and particularly the unemployment rate. That's probably the most important thing for the Fed right now. Expectations are that's going to be sort of unchanged, around 4.3%. But you could say that's kind of old news, and the Fed will want to see how the economy has kind of reacted over the last couple of months or so. I think by the meeting on December the 10th, it'll be interesting to see whether we have actually seen the November payrolls report, which should be due right around at the start of December. So I think this week there might be some limited market moves, but I don't think it will really be a sort of game changer or definitive in telling us whether the Fed will or will not cut in December.
As you said, the US economy looks quite strong at the moment, but could those labour market reports that we've not seen, of course, for a while, contain a nasty surprise?
Yeah, there have been sort of anecdotal, I suppose, private sector alternative data coming through, which have showed a slightly softer side. I mean, not falling off a cliff by any means. You listen to the Fed as well. They've had access to some data that we haven't had access to, and they've said, actually, things haven't changed too much since October. So I think if it came out, really below consensus, it would come as a bit of a shock. But as I say, everything at the moment is pointed to probably something kind of similar or perhaps modest deterioration, nothing worse than that at the moment.
That was Chris Turner of ING Research. Don't forget you can watch more videos on Reuters.com.